Okay, good evening, everyone. Welcome to another episode of Sequoia Enterprise Solution Wednesday night training. So it's another month. September, it's here, the last quarter of 2025. I still remember the first day of 2025, and it's just like yesterday. And you bring your eyes, 3 quarters already gone, and we are talking about the last quarter. So the question is, how are you guys doing this year? Hopefully, you have some impacts. You make some changes to your life financially, either financially, physically, mentally, whatever that might be, right? So, again, we have 4 more months to go until the end of the month. So, before I start, and another thing that I want to share is that from now on, we will have a new connections, a new way to connect with the team. We will have this new program called Meet the Team. Who are you meeting? You're meeting with all the advisors. For example, you will be meeting with Bobby, George, Becky, Katrina, Alan, or some other advisors that is on our platform. So every Thursday, okay, every Thursday at 3 p.m. Eastern Standard, that is noon Pacific time, we will have the Zoom open for everybody. Now, how do you know where to go? So if you go to your website, you go to any website, are you able to see my screen? Hopefully you do. So when you go to your website, you go to career and you see event calendar. You click on it, and now you see every Thursday at 3 p.m. Eastern Standard, we will have meet the team. So if you want to meet with us, feel free to click on the link, join us at that time. The Zoom is open for everybody. You can come on. You can come on. You ask any questions that you want. Talk to any one of us. It's 1 hour. Okay, 1 week for 1 hour. We would love to meet up with you. Anything that you want to talk about, we are here to help. Okay, so that is another way for you to get to know who are the people behind the scene that doing all this work. Okay, so those are all the announcements that I have. Now, so what are we focusing on since uh starting this new month or the last quarter of September? Last quarter of 2025. We have a lot of new agents in our company. Now, please understand the name of the company is called Sequoia Enterprise Solution for a reason. We are not just only providing funding for our business owners. Yes, that is one of the major um, service that we provide. But however, we also provide something that is very, very powerful. And we have not spent too much time talking about it. Just because for the last 3 quarters, we were very, very busy. We're focusing on a lot on the loan side of it. If you remember at the beginning of the year, we set a goal this year to close the entire year. Our goal is to close $50 million worth of loans. But as of today, we already over $65 million as a company. Okay. So again, we on the loan side, we are actually very, very busy, but that does not mean that on the other side, we are not busy. So what we want everybody to focus on is, hey, when you come into Sequoia, a lot of people saying that, hey, you come to Sequoia, what you guys provide so much product and services. What should I focus on? Well, focus on something that is easy and simple. Focus on something that it's not many people is doing it. Focus on something that is easy to grab, low hanging fruit, that type of deal. So one of the product on our platform is the wellness program. This is the program that we need to focus on also. If you're new to the company, if you're new to this industry, the wellness program, it's you're not selling anything to anybody. There's no cost to the employer. There's no cost to the employee. It's Bobby hate me when I say this is a free program. But again, from my understanding, to me, it's free. Now, obviously, the correct word using it is no out-of-pocket cost. There's nothing free. We all understand that somebody's picking up the tab. Who's that person, right? Or who is that organization? Actually, the federal government is the one that pick up the tab. But to the employee and to the employer, it's no out of pocket. To me, it's free. Okay. So it has a lot of potential. We see more and more company out there are promoting this type of product or this type of service, and we believe that our team need to focusing more on what is out there, what this program really is. So I know a lot of you already know about this program, but please bear with us. We also know that there are a lot of people on this call are new to the platform and new to this program. So without further ado, I will have my one of our partner, Bobby, onto the call to share with us what this program is. But before he starts, I want to talk. I want to say a few words about Bobby. He is he is an insurance broker. He has a life insurance, health insurance brokerage, and here in the Washington D.C. area, his agency is the number one agency promoting Obamacare. So he knows about the wellness program very well. And he's going to share with you his background, why is he here in Sequoia, and what this program is all about. And especially for those of us who pay attention or you listened to him talk last time about the big beautiful bill, that big beautiful bill actually enhance this particular program right here. So again, without further ado, Bobby, the floor is yours. Let us know what we have.
All right, thank you, Alan. Hello, everybody. Sorry, I'm sick today, so my voice is not as normal as it should be. Well, what Alan's talking about is the wellness program, also known as SMIRF, which is a self-insured medical reimbursement program. And let me go through the presentation for you guys. Now, like Alan was saying, for me, I am an insurance broker. I have over 100 agents with my company. And, right now is the perfect time to get into this space. And the reason is this: insurance rates are going up. It's very high. A lot of companies are not going to be able to afford health insurance for their employees. And if they have an alternative to, help with retention, this program is what's going to, do the job for them because a lot of companies will be canceling their health insurance because the rates are going up so high. Okay. So let me start. Hold on. Everybody can see my screen with the okay. Uh, Let me see. All right. So this program is called the Self-Insured Medical Expense Reimbursement Program, short for SMIRF. And this program is basically a program that came out during when Obamacare came out. And let me see. Let me do this. All right, this is better. Okay. And it took a while for it to um let's just say for companies to know about this program. So I would say the market right now, less than 5% of companies know about this program. And the reason is this: even though it's part of the Affordable Care Act, in order to implement the program, you have to be able to know the tax code. You have to be able to know how to implement it, and more importantly, you have to have insurance license to sell the supplemental insurance that's involved. So, when we run into businesses and we talk to them, they're like, "Oh yeah, my accountant knows about this," or the accountant cannot do it by himself. He has to have the wellness program set in place. He has to have a insurance license to even sell the supplement uh, insurance. So that's why a lot of time when you guys run into a business, there's those three components have to be in place in order to even implement this program. Now, this program here is IRS, HIPAA, and ERISA compliant. And of course, it's available at no net cost to the owner or to the employees. And basically, what we're doing is we're utilizing the FICA taxes to pay for the wellness program. And whatever is left over, the employee could use it to buy supplemental products, or if there's an overage, they can actually uh, take the money in their paycheck. So that being said, when we approach a business, we're basically telling them, hey, there's a federal program that your business is entitled to, where it is where you can have additional benefits for your employees at no net cost to either one. That's basically what we tell them. And in order for us to qualify, we need certain information from your company. So, in order to qualify for this program, the business have to be a W-2, must have qualified insurance in place. Now, this is part is very important. Let's just say if the company didn't have any insurance plan whatsoever because it's too expensive for them. Well, what we will do is put together a MEC plan, MEC standing for Minimum Essential Coverage. That's part of the Affordable Care Act. It's basically one of the lowest bronze plan, and it costs about $35. And we'll use the FICA taxes to pay for that. So the owner is not paying anything, or the employee is not paying anything. And this will only qualify for full-time employees. So these are the qualifications for the program. Now, why would what benefit does the employer have or the employee? Well, the employer will save on the FICA taxes because we're utilizing the FICA taxes to pay for this. So the adjusted gross income for the company would be lower, which will also lower their workers' comp. So, and an average savings for the owner would be $630 annually per employee. And for the employee, their benefits is that now they have um, they have wellness program. They have supplemental insurance that they can use when they need it, and it's portable. If they leave the company, the only difference is that now they have to pay for it. So, for the company, that's something that can help with their retention. And if you run into a business, oh, excuse me, if you run into a business where there's an HR, you just let them know that they don't have to really do much work. When we talk to them, all we need from them is a census and certain payroll information. After that, we take over. We'll enroll the employees, we'll do everything, and then every month we'll work with their payroll to implement the program. And we have a TPA, a third-party administrator, to take out the money from their payroll to pay for the insurance. So it's very easy for them because a lot of time when you work with a company and you run into the HR, the the hardest part is for HR to understand that we're not changing anything that the company is doing right now. If they have an insurance agent working with them, that's fine. We're not changing their insurance at all. We're adding something, a new benefit, and the HR person doesn't have to do anything. A lot of time HR people say, okay, I don't know this, I don't understand this, so I'm going to be responsible for it. If something happens, I don't want to be liable for it. But just let them know that they won't be liable for anything. We're not coming in to change anything. We're not, the most important thing you want to tell the business is that, look, you guys don't have to cut us a check for anything because this is not going to cost cost the owner any money or the employees. Everything will be taken out there from their FICA taxes. Now, these are the tax code involved in this program. So every month, every time we do the payroll, we put these tax codes in, and it will take the money out and reimburse at the end. But anytime that the business owner or their accountant wants to know, hey, how does this work? They can refer to these tax codes where it'll allow us to take out the money pre-tax and then reimburse it back, and then be able to give them a cafeteria plan, which is tax code 125. But these tax codes work uh, concurrently with each other in order for us to implement this program correctly. So that's very important for, I guess, sometimes the accountant needs to know. But once we show them this, they're very comfortable with us proceeding with the program. Now, this page for me is very important to kind of show you all what the employee can get. So, average the employee can have an allotment of 150 to $250 a month. And this slide here shows what $150 can be used for. They can get short-term disability. They can get critical illness with cancer. They can get hospital indemnity plan. They can get accident insurance or and life insurance, guarantee issue whole life insurance. Now, why is this important? Because if an employee, they have the wellness program already, and then they have some money left over to get all of this. So, for example, if a company right now has insurance for the employees, the average deductible is like $3,000. And if the employee got in an accident and went into the hospital, guess what? Because they have this supplemental insurance, their first day in the hospital with the accident insurance gives them $2,000, and then the hospice indemnity give them another two $750. So just their first day, 24-hour in the hospital, they're getting $2,750 from the supplemental policy, and this is a check cut out to them cash. Insurance, their comprehensive insurance is not going to give them a check to do whatever they want to do with it. So this they can use to pay for the deductible because they're in the hospital. And then if they're in there for more than one day, that's another $500 here, $100 here. So you have to keep in mind this is supplemental. It's not comprehensive. And the difference is that, um, this just supplements what they have on their comprehensive insurance. Comprehensive insurance is they go to the doctor, they have a copay, then they have a deductible, they end up in the hospital, and they have a co-insurance. This here is basically giving them a lump sum or a specific amount based on what happened. Okay. So that being said, they will also have a wellness program where they can go to a doctor virtually. Let's just say if they have a cold, like for me, for example, I probably have the flu or strep or something. I can get on 24 hours in the app and talk to a doctor, and the doctor will send the prescription to the nearest pharmacy, and I can get my antibiotics, which I don't have to leave work and go see a doctor to do that. So the wellness program helps with things like that. You can even, let's say, if your pet was sick or threw up, you can, see the virtual vet. Because sometimes you go into vet and bring your pet in, just the consultation alone could be a couple $100. And this is all free with the wellness program. They have a weight management. You can go see your psychologist. You can for mental health. You can see a dermatologist. All of that free within the wellness program. So that's very important as part of this program is that you get the wellness program, but also this supplemental insurance. And whatever the employee doesn't use towards all of this, they can take home in their paycheck. So you're going to a business, letting them know, hey, we can help you add additional benefits to your employees, but the employee can actually increase their check, amount with the overage. So, they're not cutting a check, but you're helping their employees make more money. So that's very important. Now, when we have a client, your job is to get the census. The census will allow us to get the proposal for them to show them exactly how much FICA taxes the owner will save and how much the employee will get every month to spend on the wellness program and on the um, supplemental products. And the census is the most important thing. And a lot of times you run into a business and the owner might say, I don't want to give out, all this information, which is fine. They can give us a census. I wouldn't need names to it. They can just say employee number one, two, three, four, five, whatever the case. But once we have the census, then we can come back with a proposal. And the proposal will have all these numbers here, what the monthly fee is, how much they have for the allotment here to spend on the supplemental products. And then after that, the owner will sign the proposal, and then we go into enrolling them. And once they enroll, after the first paycheck, you all will get paid. And this is a sample paycheck. Um, and this page is also very important because we show the owners this is a paycheck without the wellness program, and this is with the wellness program. So as you can see here, this doesn't show that they have any health insurance. That's where we will put in the MEC program that costs $35 a month. But here we're taking out $1,220. And a lot of people ask me, where did this $1,220 come from? Well, it's basically the average cost to maintain anyone's health in 1 year determined by the standard deduction for a single person by the Health and Human Services by the federal government. So we're allowed to deduct that. And then here, as you can see at the end, this is the reimbursement. So if you can see their total taxes here is 575. It got reduced down to $372. And this is what they can use, $203.08 for the program, the allotment every month. So as you can see, their net pay did not change. Now, in the event that they don't use the full $203.08, they will get it back in their paycheck. They would have a pay increase. So this page is very important. This page is what the owners will understand more. And when we show this to the accountants, they fully understand how it works. So that's pretty much what the program is. Now, the steps for us and for all of you as consultants is you basically talk to a business, and then if they need more information or they want to set up a call, I will do the call, or our other specialist, Corey or Hugh, can do the call. But during the call, we'll explain everything to them, and after, if they are okay, you guys need to collect the census and to payroll their W-4. Why do we need this information? We need it to calculate the allotment for every month and show the owner what the savings would be. And once that happens, then we send the proposal to the owner signs, and then we set up the program, and then we enroll the employees, and then after the payroll is done, then you guys get paid. Right now, you will get paid $12 to $16 a month for every employee that you sign up. So, as part of Sequoia's business model, you refer, you send us the customer, we will close the account for you. That's all you have to do is collect a few paperwork, and then you can make money just by referring. So that's what I have for you all for this program. Um, let me. So I'm open for any questions that anybody may have for me for the Smurf program. So we are going to open up the line if anybody have any questions. So anybody have any questions for me?
Bobby, can I jump in for a minute?
Yeah, go ahead.
Okay, Bobby, you mentioned something about the deduction is 1220, right?
Yeah.
So let me show you how to get there. Very, very simple. Ask ChatGPT. Okay. Anybody can see my screen? Can you see my screen? Okay. So if you go to Google, you just type in how much it costs someone to stay healthy in the United States. It will tell you yada yada yada, $14,500 annually. So you divide it by 12, that's approximately $1,200. So that's where that 1220 or 1208, where that comes from. Okay, so just to let everybody know where that number comes from. Right.
Alan, you should do 2025.
Well, I just did a
Yeah.
search on how much it costs someone
Yeah.
healthy in the United States at, let's see what it says, 2025.
Yeah.
Uh,
It should be 14,640.
uh, it didn't show up. But when I just take out the 2025, probably 2025 is not even end yet. So probably he cannot calculate the whole year, right? So let's say, but again, just get an idea where that 12 12 $1,200 come from. So average is about 14,570 in 2023.
So
Okay.
that's the number that they will allow us to deduct and then reimburse back. And that's where that number comes from.
Yep.
So we're open for questions. Anybody have any questions?
Where do you got census form asking by K Moti? When you submit the loan, not loan, when you submit the scenario, then we will email it to you. Because in the past, we tried to have you guys download it, and some people saying that oh, it's going to be confusing, so on and so forth. So again, right now we cut out all the downloading, right? So when you submit it in, then you will get a response from the system and including the sensor to you. And once you get the sensor, you can keep it.
Alexis, you have a question?
Yes, can you hear me?
Yes.
Yes,
Yes.
I just wanted to make sure with the business, is there a limit the amount of employees, or if they have one employee W-2, I could present this?
No. The minimum we want to do is 10. Uh,
Okay,
and 10 meaning qualified. I forgot to mention that if the employees have Obamacare, they will not be qualified to for this. And the reason is this: if they have Obamacare, they're using tax subsidies to pay for their premium. This program is the same thing. You're using taxes to pay for the premium. So that's a double dip. So a lot of time when you guys talk to a business, check to see if any of the employees have Obamacare, because once they do, they won't qualify for this. So we want to be able to do a business with 10 qualified employees or more. Why? Because that's when the owner can see the savings. And it'll be an advantage for them to get it. But I wouldn't do businesses with 3 or 4 employees. But remember, qualify employees. And of course, like Alan said earlier, the Big Beautiful Bill reinforced this. Starting 2026, any business owner that have this program in place will have an additional $100 tax credit on a monthly basis for the first year. So that's $1,200 per employee, in addition to what they can save, $630. So it's an incentive for them to even have this program starting 2026. And then the year after, they'll have $50 tax credit. So the first 2 years, they'll have additional tax credit if they have this program in place. Okay.
Okay. Okay. Thank you. Understood.
Yeah, and also this program, the employees can cover for their whole family. So when they pick a plan or they pick something a supplemental product, they can cover for the whole family. That's why the W-4 is very important when we do the proposal, because we want to see if they're single, if they're married, they have kids, whatever the case. So it's not only for the employee, it also covers for their whole family. Now, there's a question that says they can qualify if they are in the spouse group insurance from another business. So, if they have insurance from another business, they can qualify for this. It doesn't matter because this is voluntary. This is not something that where it's required. This is voluntary. So yes, they can still cover, they can still qualify for this. The only time they can't qualify is if they have Obamacare, which is a double dip. Okay. Any other questions?
I got another one, Bobby.
Yes, sir.
Um, previously, didn't we? Let's see, we had a training on the Big Beautiful Bill. Was did I misunderstand in 2026 they will allow Obamacare or not?
Um, in 2026, I remember that it says that if you have Obamacare, that you can, but I really need to verify how that works. That's why I don't want to mention that right now, because it wasn't very clear, but it did mention something where if you had Obamacare, you would still qualify. And we have to verify that whether it's with the tax credit or for the owner or the employee can qualify, but that's still considered a double dip. So I'll get back to you on that. And once we find the correct understanding on that, then we'll mention that. But right now, the only thing that I would mention is that for the owner, they will get $100 a month tax credit if they have this in place. So that's an incentive for all of you to let the owner knows, hey, you're not only going to save average $640 for employees, you're going to have another 1,200 tax credit, added to it. I mean, that's huge for the owner. And the employees now they're getting benefits that they're not paying for. And if they have overage and they don't use it, they can actually keep it in their paycheck. So you're going in the company, letting them know that, hey, I can increase your employees' pay. That's exactly what you're doing, without them doing anything. And it's all legal. It's under the tax code. Okay. Because as long as we have a wellness program in place, we're allowed to deduct it and we're allowed to reimburse it. That's it. And there's a caveat to that. They have to use the wellness program. Okay. Not 100%, but downloading the app is using the program. So if some of the employees are using it, but if none of the employees are using it, then they're not compliant. So please keep that in mind. Some of the employees have to use it, and if you download the app, that's using it. Okay, so by law, they need to use some parts of the wellness program to make the program compliant. All right, so any other questions? Yes, Alexis.
Yes. So when I approach a business and they ask, why are you helping me? What's the catch? What do you get out of it?
Well, the catch is number one, the program is they're entitled to, and your incentive is that once you enroll them and they get the supplemental product, you get paid commission. So it's a win-win. You know, you're helping them and you're getting paid from the insurance company.
Let me jump in for this, Alexis. Let's first of all understand you are right at the bullseye where why the government is offering something like this, right? So the government every single year spend billions and billions of dollars to help low income individuals. So you're seeing a lot of them getting benefits. However, they get the benefit, but it's not helping the economy. It's not helping the community. So especially after COVID, a lot of the small businesses it's having very difficult time to keep their employees just because the benefit is getting very, very expensive. Give you a perfect example. If you go to Las Vegas today, you walk down you walk down the street, a lot of the business over there, restaurants, spas, you name it, cannot find employees because most of the employees willing to take a lower income, lower paycheck, and work for the casino instead of working for a restaurant where they can get more income. Why? It's because the casino can pay them the benefits. Now, and a lot of these small business cannot. Now you think about this. This is not just happening in Las Vegas. This is happening across the country. And you think about this. If a business cannot keep their employee, what would happen? They will spend time constantly looking for new employees, keep the employees, keep so on and so forth. And the business would not be able to grow. And if the business is not growing, what happened to the tax, to the government? Obviously, it's not there, right? So with this bill is not, it's not a new bill. It's actually signed into law back in 2013. The law is called Affordable Care Act. Have you heard of it? Do a Google search. Affordable
Yes.
Care Act, right? So Affordable Care, underneath of Affordable Care Act, what happened? One of the biggest program that came out is what? Obamacare. What is Obamacare support? A lot of low income people. But are those low income people paying back to the society? I don't know. Probably not. So the government, along with the Obamacare, or along with the Affordable Care Act, Obamacare is one of the product, but this is called Section 125. Actually, that is what the IRS code is. If you do a Google search on Section 125, you will find it. So Section 125 and Obamacare is actually parallel. The Obamacare is for low-income individuals. Section 125 is adding benefits to employee. Now, why have to go through a company and provide a benefit through the company to the employee? It's because through this program, now the employer can offer benefit to the employee, otherwise he would not able to afford. So in that case, he is able to keep the employee in their shop. Think about this. You work as a waiter, which I was a waiter before. You work with as a waiter, a restaurant, you work in a restaurant, and you all got paid the same. But one restaurant give you benefit and the other one does not. What happened? Most likely you will leave. So that is what happened. The government is actually paying, willing to take less money and keep the employee healthy, keep the employee, stay in the company so that the economy can grow, the company can grow, the economy can grow, the community can grow, the tax can increase. So that is good thing for everybody. But unfortunately, not many people is actually out there promoting this product. When was the last time you hear something like this? I bet you don't, right? So
Just today.
you just today, right?
Yeah.
Absolutely. But this law is already into the program since 2013. You're not the only one that never heard of something like this. Last year in 2024, January 2024, we got invited to the White House. By the way, Sequoia, we are the financial coach for a lot of nonprofit organization, including one of them is called National ACE, which many of you already know. We have an annual convention in New York on September the 9th. But anyhow, 2024, we got invited to the White House to talk to the official. And I met with this program manager under MBDA. MBDA stands for Business Minority Development Agency. Okay, I met with the head, the chief of the MBDA. And I sat in her office and I told her that, Miss Hill, there is a program like this. And she looked at me like, are you serious? When did this thing come out? I said, you guys wrote the law. You passed the law. And they didn't even know about things like this. So again, that is why this thing, well, again, this is why this thing exists. It's not to, what is your catch? The government would not do anything that it's not not benefit to the government. Do you understand? Again, they are doing this thing is because we save them a lot of money. We save the government tremendous amount of money. So that is why we are here doing it. And now why Sequoia doing it? It's because what is our main business? Our main business is commercial lending. We have a lot of clients that needs what working capitals, equipment loans, fundings, buying business, and so on and so forth. Now, what is the chance for you to get in front of a business owner and tell them that, hey, I can offer you working capital? Most likely, he's not listening to you. But what if you use this product as a door opener? You go to all these businesses, even though they cannot qualify for it, even though let's say they only have like 3 employees, 5 employees, they're not qualified for it. Hey, they might grow in the future. You present this thing to them. This is something that no out of pocket. I'm basically handing this thing to you. You already pay for it through your tax, through your FICA tax. You're already paying for it. My job here is to help you to enroll into this program. Now, what am I getting? I am giving them money back. And now, when you give something that they need, and guess what? You become their hero. When they need funding in the future, they will call you. And that is why I'm not sure if you were with us during the COVID. During COVID, we done over 5,000 PPP. Anybody remember those days, PPP? Anybody still remember the PPP days? Paycheck Protection Program? We done over 5,000 PPPs. And now we have 5,000 clients that we are able to get into. So again, whatever I see, if you are in the PPP days or the SETC, you know what I'm talking about. Those product, PPP, SETC, they are temporary. They're all gone. No more. Done. Finito. But this Smurf, it's actually the extension. That's how I see it, of the PPP. Now you're going back to the same business to let them know that now I can give you something that is more permanent. This has no deadline. Like PPP is stopped, SETC is gone. There's no more. But this has no deadline. So again, I hope I answer your questions. And that's why we have so much passion about this, is because now it's a door opener for you to walk into every single businesses. I'm not here to sell you anything. I'm here to give you money by enrolling you into this program. Does it make sense?
So let me add to that. A lot of people know about Obamacare or the Affordable Care Act. The reason why this part of the Affordable Care Act has not been implemented is because it's not easy to implement. And like I said before, you need certain factors to even make this possible. But Obamacare, or should I say the Affordable Care Act, the reason why they had it is to lower health costs for the government. And no matter what administration comes into office, no matter if they want to change the Affordable Care Act, the reason why they haven't been able to is because it's working. It's working. So, that's why I think this is going to be around for a long time. And, with the Affordable Care Act and the big, beautiful bill now, adding to it, it's a great time for us to, go into businesses and let them know. And of course, our business model is that we're disrupting a lot of industries. So since, this is something only less than 5% of businesses know, it's our job to go out there and let them know and help them. And we get paid commission based on enrolling them. And we can be very straight up and let them know that. But and there's not a lot of companies out there that knows how to do it. And you guys are with a company that do know how to do it. So it's just having a conversation, and we will help you with all of that. Um, Now, there's a question in here, say, um, if a company has a pre-tax program, are they qualified for SMRF? So, like I said before, when you talk to a business, you let them know that number one, you're coming in, you're not changing anything they're doing. If they're taking money, 401k out pre-tax, if they're taking the health insurance out pre-tax, now you're taking out pre-tax this wellness program. So it doesn't interfere with whatever they're doing. So the answer to that is that yes, we can come in and we do it, and they would have three different pre-tax deduction, which is their 401k, their comprehensive insurance, now the wellness program. So it doesn't interfere with that. And the second part to the question is when will the company get reimbursement monthly or quarterly? So this reimbursement will come out at every paycheck. We'll take it out and then we'll put it back the same paycheck, and we will work with their payroll to deduct the amount every single month, and then the TPA will send the money to the insurance company to pay for the supplement. So everything will happen at the same time, and there's not going to be any extras or anything where the company have to worry about the end of the year to file taxes, because all the tax codes will be put in at every payroll. So it's very easy, and we don't interfere with their 401k deduction or their comprehensive insurance deduction. I hope that answers your question. And it goes with every paycheck, and it's not a quarterly or anything like that. Okay. Any other questions? We have 9 minutes left. Anybody else have any questions on the Smurf program? Anybody still there?
Now we do have a lot of marketing materials in your back office. Okay, so go into your back office, go into the marketing on the side menu, click on marketing. You will see the marketing material for Smurf. Okay, so now how do you market something like this? Let me share with you what we do. If you obviously the most basic way to do it is for you to knock on the business store. You go down the street, you see a pizza place, you see a barber place, you see a mechanic shop, you walked in. But the chance for you to actually see the owner is very slim. Okay. But it works. That is the first way. The second way to do it is through warm market, just like anything else. You sell insurance, you sell real estate, you sell mortgages, you sell whatever product. You will go through something called warm market, meaning that you know some business owners. You give them a call, let them know that, hey, I have a program like this that I can enroll you in. Well, let me see if I can qualify you into this program or not. Okay. So how do you qualify? Tell them to fill out one of the online application, the wellness program, collect the sensor, payroll journal, and W-4. We will give them a proposal. If they can qualify, great, we move forward. If they can, we can't. They got nothing to lose. So that's the second way to do it is through warm market. Now, of course, and another ways to do it is through cold market. Cold market are the people that you don't know. So how do you get a hold of those people? You send out emails. You send out you do it on social media. Now that is totally different subject. That is not my expertise. I bet that a lot of you guys on this call right here, you are the expert. Many of you are YouTubers. You do Instagram, so on and so forth. That's not my expertise. I don't know how to do that kind of stuff. The next one is using the Sequoia platform. What is Sequoia platform? Our philosophy is this. Our philosophy is that the Sequoia platform, the philosophy is that we never look for the client. Who do we look for? We look for resources who has this clients. So if we're talking about mortgages, loans, commercial fundings, who are these resources that knows these clients? I said it many, many times. Four type of people: real estate agent, loan officers, insurance agent, and CPA. Am I right? So those are the four type of people that we recruit onto our platform. Many of you are in that business. Now, when you come into Smurf, who is the end client? Business owners. Now, what are the resources that knows these businesses? Can you think of some? Can you think of any entities that knows these businesses? You're all waiting on me, aren't you? You're all waiting on me. No, I'm not going to tell you. You got to come back next Wednesday. No, I'm just kidding. So who are all these resources? Number one, Chamber of Commerce. Chamber of Commerce. Now, let me tell you what Chamber of Commerce worked. Chamber of Commerce, what do they need? They need members. They need businesses to sign up with their chamber by paying the membership. That's how they survive. In turn, when they receive the membership, what do? They provide service to their members. That is what the nature is. Now, however, a lot of the chamber having difficulties to keep their member because their member do not see the value of that chamber. Why would I keep? I don't know how much they pay. It could be $10 a month, all the way to hundreds of dollars a month, whatever that might be. So, what is the value? So, the way that we do it, I do it. I partner with Chamber of Commerce. I go to Chamber of Commerce and I met up with the guy. I gave him a presentation about what this program is. Now, what we can do. The way that we do it is that we do it through the Chamber of Commerce, saying that, hey, your member, because of joining your Chamber of Commerce, now your member can receive what? Benefits. They can receive benefits because they're joining your chamber. Now, do you think that the Chamber of Commerce is willing to work together with you? It does not cost them anything. Absolutely. Now, do you think that the member is willing to stay with the Chamber of Commerce by paying their membership? Because they pay their membership, they will receive what? They will receive the benefits from us. So again, that's what we do. And now the biggest Chamber of Commerce that we partner up already, it's called National ACE. If you're on our Instagram, if you're on our Facebook, if you are on our social media network, September 19th, we will go to New York. National ACE stands for National. If you do a Google search, just do it. Goes to National, called National ACE, ACE.org, nationalace.org. It stands for National Asian Chamber of Commerce for Entrepreneur. Okay, for entrepreneur. Okay, so National ACE. We meaning that Sequoia. If you go to National ACE, they're saying that you are a Sequoia member, they welcome you. We are the financial coach for National ACE. Now, National ACE representing a lot of Asian businesses here in the United States, and they are the biggest Asian nonprofit organizations. They're representing over 2 million small businesses, including Chinese, Vietnamese, Filipinos, Indians, Pakistanians, anybody that's Asian. So September 19th, there will be an annual convention up in New York, in Manhattan. We are one of the sponsors. So again, if you want to capture client, feel free to come with us, but you have to pay for the ticket. The ticket is $700 per person. But if you use the Sequoia code, you only pay $100. Okay, you only pay $100. Now over there, you can meet that. I don't know how many people. Last year, there's over 1,000 small businesses that showed up. This year, hopefully another 1,000. But again, you go there, you capture all these people. But now there's Chamber of Commerce. Now, besides of National Ace, there's so many other Chamber of Commerce. Do a Google search in your local area. Instead of thinking about looking for clients, looking for the resources, where those clients come from. Because those individual businesses already established a relationship with the Chamber of Commerce. And when you go in and partner with the Chamber of Commerce, your success rate is a lot higher than individually when you talk. Because once you partner with the Chamber of Commerce, we can go in and do a presentation on behalf of you or for you for that chamber to all their members and sign them up that way. We can absolutely do that. So just let you know, September 19th is in New York, and September 20th, immediately the day next, is back here in Washington, D.C., is the Filipino Chamber of Commerce that they already invite us to go. So now I'm sure that in your area, you can find a lot of Chamber of Commerce. Okay, so again, that's all I need to share. And we already at 9 o'clock. Alex has asked, what is the other three after Chamber of Commerce? I only do Chamber of Commerce. Now, of course, I do other three, but I'm going to share with you that later. But just focus on Chamber of Commerce first. Okay?
Okay, I'll focus on that. Thank you.
All right. So guys, anything else? If not, hey, thank you so much, Bobby. Bobby is the expert. Any questions about this particular product, please consult with Bobby. Okay? Everybody already have his contact email, so on and so forth. If not, then send an email to support, and they will send you Bobby's information, or come on board every Thursday, 3 p.m. Meet the team. All right, guys. If that's the case, I see you next Wednesday. Good night, everybody.
Thank you.
Thank you.